Hi there, it's Peter Temple for May the 21st, and this is actually the market report for Monday, May the 23rd. So I'm going to concentrate mostly on the S&P 500 today. I will take a quick look at the Dow, and we'll also look at a couple of currencies. So this will hopefully keep it relatively short. Now, I've also given you a extra special treat, a freebie, where you can look at a module from my course, upcoming course, which is about motive and corrective waves, and that may help you a little bit with the information or to how to analyze the market, looking at patterns and to understand the difference between a motive and a corrective wave, which is really one of the basic things behind Elliott wave. So take a look at that. I'll leave it up for a week. You've got to be logged in and subscribed to the forum and able to see that module, so it's protected in a way. So we'll do that for a week. Now let's get into looking at this market. So here's the overall. This is looking at a 4-hour chart of the S&P 500, taking us all the way back to the top in May of last year, and we came down on a first wave. And I've gone over that time and time again, showing how the structure of this is a first wave. It is motive. And then we had an ABC up, and this was the contentious issue in here, because for a while I thought maybe this is a truncation, but I really don't think truncations actually exist. I've never seen one. And I think that if you look at the Elliott Wave Principle book, I really am skeptical about some of the things that they show in there in terms of a truncation. So I don't really think it exists. I think that Elliott waves always complete their waves. So ABC down, well, we thought a truncation, but this has now become what I would refer to as a huge second wave. So one second wave is going to complete up to 2116 is still what I contend and have contended for a while. And what we have here is a corrective wave up from February 11th. You can see this ABC, so AB, and we'll go up to a C here. Actually, sorry, an AB, actually there should be a C here. There's this ABC, and now there's a larger, because this fourth wave, what we would normally call a fourth wave, is so large that it is bigger than anything else in the A wave. So we would call this an ABC in the blues, ABC wave. And that again reinforces this idea that we have a corrective wave. Now we've got 5 waves up within this C wave here, and I'm sorry there's not a C marked there. I can quickly put one in as a C wave. We'll make this little baby white so that it is correct, and it really should sit just above here, and there is our C wave. So there we have our ABC. And the problem with this being a corrective wave is that any motive wave is that any motive waves have got to have motive subwaves. And this wave clearly does not have a second wave. It's got an ABC. So an A fourth wave here, C, but it does not have a second wave. So this entire wave right from the get-go I knew was corrective. And so again, we've got this very large wave up here, so this does not look anything like a motive wave, and this is going to, I think, top at the 2116. Could go a little higher, but that's the overall look at the market. And if you go to the other indices, they look pretty well the same. Let's go take a quickie look at the Dow. The Dow is showing very much the same thing, top up here, 1, and again this very large second wave. Now it's gone up a bit higher than here, and that's fine. And we've got this A wave up and a B and a C. What's very interesting about the Dow is that it actually down here did not come down to a new low. So in actual fact, we'll move this over here. This should be a C wave here, ABC, and then we have an ABC, and this is actually going to appear to be 5 waves when this completes. But when we look down here, this can't be a motive wave, because this wave, if it was a first wave, is in 3 waves. You can see a very clear ABC. It does not have a 1, 2, 3, 4, 5. It's missing a second wave. So we know this is a corrective wave, and so this would be a major second wave here, and this is portending a third wave, a humongous third wave down once this wave tops. So we'll go in and we'll take a look at a close-up of the S&P 500. Here we are zoomed into this last wave, this what we called for a while the fourth wave of the S&P 500. This is an hourly chart. And what we're showing here is the top of the C wave, this from the February 11th bottom. And it actually did 5 waves up within this C wave. You can see the 3, 4, 5. This is the very, very top. And then it had this ABC up to the top, which for a while we wondered whether it was a triangle, which, in retrospect doesn't really make a lot of sense. It really comes down to a failed wave up to the top. And there's no other way to label this but an ABC because it is not motive. And here's a wave in here, which is a ABC, and so that shows that this is not a motive wave up. This fourth wave that came down is actually a B wave, as I showed you, because it's so large, and it's come down in actually it's come down in 5 waves, but it's overlapping waves. So if we were to think about this being perhaps a motive wave in 5 waves, this would be your first wave, your second wave, your third wave, fourth wave, and fifth wave. And corrective waves often have 5 waves, but there's a problem with them. And this big problem is the fourth wave here is in the area of the first, which is a hard, fast rule in Elliott wave that cannot be broken. There aren't that many of them, but there are a few, and this means that this is a corrective wave. There is no question about it, and it is going to retrace. So I've known that for some time, and in actual fact, I pointed out that this wave here at the very beginning is also an ABC wave. So once you have an ABC wave as part of a wave structure, the wave is always going to be corrective. It doesn't matter how far down it goes. So, everybody's been saying, oh, we're topping and all this kind of stuff. And I've been going, well, no, this is a corrective wave. And so it just has to find its way to the bottom. There's an interesting thing here in that we thought we might have had an ending diagonal here. Obviously, it isn't because it's not at the end of the wave. This is the end of the wave. So in actual fact, and I didn't think this was an ending diagonal until it had one more leg up, which would have looked something like that, but it didn't come back down again. It stayed up there and actually completed 5 waves and then went up to another top. So it wasn't an ending diagonal for those 2 reasons. So we've got this double zigzag coming down to the bottom here, and this is a big B wave. It doesn't have to come down to the previous fourth because it is a B wave, and this is getting a little technical. If it was a fourth wave and this was motive, it would have to come down to correct this crazy wave up. But it doesn't have to do that because this is a B wave. Again, reinforcing the fact that this is a great big corrective wave right from February 11th up. Now, ending waves are in 5 waves typically, or they can be an ending diagonal, or they can be a triangle. This looks like we're going to get an ending wave in 5 waves. We've got a first wave up, and in actual fact, I have got in the post a chart of ES, the S&P E-mini futures, showing the smaller waves in this wave, and you can see from that chart that we have not quite finished the first wave. So I would expect this weekend we'll maybe finish that, and then maybe Monday we'll get this second wave down. I'm not quite sure of the timing, but we should get a second wave down to 62%, and that would really cement the trend change here and say that yes, we are going to get motive waves up. After 2, of course, we get a third wave, which would end up being 1.6 times the length of the first wave, and then we'll have a fourth and fifth up to a final top. I'm still projecting this top to be somewhere around the range of 2116. It might exceed it just a touch, but I would think that that would be the top of our market, looking for a third wave after that. So that is the S&P 500 and what I'm expecting over the next week or so. Here's a 2-day chart of the euro-US dollar currency pair, and this is just to show you where we are. We're in a large fourth wave corrective situation here. This we thought was for a while a triangle, but it's gone up above a triangle. And if you were to actually count the waves in here, you would consider this to be a smaller fourth wave. I'm expecting this to turn up to get to the 38% retracement level, which is what this horizontal line is. So you end up having an A, B, C wave, and then we're going to head down in a big fifth wave. And so that's where we are in the euro. I'm just going to jump in here a little tighter to show you what's happening this week. So here we are looking at a 2-hour chart of the euro, and this is this ABC wave, the fourth wave, which I mentioned to you in the last chart. So we're really zoomed in here. And I had projected this wave coming down to here with my Fibonacci tool. You can see that you find the end of the first wave and you extend it. And here's my line right there. And in actual fact, that's where we've come down to. We just exceeded it a little bit. And we've gone up and we're kind of wandering around in this area. I expect this to come down and do a double bottom here. And we will see really probably as we get our second wave in the US equities, I would bet this would come down, and then we're going to have the euro going up to its target probably during our third, fourth, and fifth wave in the US equities. That's what I'm projecting. That would make the most sense based on all the markets moving together as they have been doing for months. So that's the euro. I'm just going to take one quick look at the Canadian dollar, which is doing the same thing in the opposite direction. Here is the 2-hour chart of the US dollar Canadian dollar currency pair, and I'm actually long in this. I watch this quite a bit and like to trade this because it's got some fairly clean moves. This, like the euro, in the opposite direction, because of course this is kind of an upside down chart. It's got the euro US dollar is the euro chart. This is the US dollar Canadian dollar, so it's flipped in terms of the direction. And this is an ABC, and I've got my Fibonacci tool in there, and you can see my projection here. This is still heading up, and when it gets up to the top here, I would expect this to head back down. I would expect probably, again with the second wave in US equities, that this is going to head up to the top here, and it will come back down, which would be a great trade, and should hit the bottom here at least, and may exceed it, but it should at least test the bottom of this market. And that should happen as US equities go up in their final wave because it's been moving again in tandem with the US market. It's all the same market, and I've been saying that for quite some time. So that's my look at the market for the coming up for about the next week to 10 days. Should be interesting. I'm expecting a top coming up sometime in the next couple of weeks. Great trading out there. Be careful though. It's a tough market. It's a pretty even market, so just watch what you're doing.